I think we're doing remarkably well on Bitcoin. I mean, if you look at it, we're at 26,538. Now, if you go back to when the SEC broke the news that they were going after Binance, that was June 5th. So we go back to June 5th, which is over here. And you can see that on that day, we started the day at 27,070. So about $500 up from where we are today. And I think what we've had is we've had a remarkable bounce from Bitcoin, which went all the way down to under 25,000. We went to 24,756 on this chart. And now there is a battle. And the battle that Bitcoin is actually fighting is the battle against this 200 weekly moving average. So what you can see is that if you look at the 200 weekly MA, you got Bitcoin right now. It closed under the 200 weekly MA last week. And then this week, I mean, we were pretty much there or thereabout. The 200 weekly MA was about 26,550. And Bitcoin yesterday closed at 26,350 or somewhere there or thereabout. Now, the big question is whether the momentum that Bitcoin has can be carried to push it over the 200 week moving average. Now, we've got to look at why Bitcoin is structured the way that it's structured and what's actually going on in the market, because I guess what pushed us over or pushed us close to this 200 week moving average was the announcement from BlackRock that they are about to launch a Bitcoin ETF, or that they've applied for a Bitcoin ETF. Now, they're not a small company. They're the world's biggest asset manager. They're the US's biggest asset manager. And as some people actually say, they actually are the US government. And they've got a track record of getting 575 of 576 ETFs that they've applied for. They've also got a great track record to propping up asset classes when they launch ETFs. In fact, let me show you something very, very, very interesting. If you look at what happened when BlackRock created the gold ETFs, this is what happened to the gold market. So this is where they created the gold ETF. And this is what happened to the gold market after they created the ETF. So it's a big deal. This is not a small player applying for an ETF. This is BlackRock, which is effectively a proxy for the US government applying for an ETF. And in my mind, that is the only reason why Bitcoin is back up off these lows and gaining momentum. So I think what we're going to talk about on this show is we're going to look at Bitcoin versus the altcoins, and we're going to look at the effect that the BlackRock ETF may actually have on Bitcoin in the short term and in the long term. We'll also look at what the chances are they're actually going to get this ETF approved. And then lastly, I want to show you a pick in the crypto game that maybe is not your traditional pick, but maybe something that you should be looking at if you want a good, safe play in crypto. And then we may actually also talk about how altcoins and why altcoins are getting wiped out. So lots to talk about today. I know it's a holiday in the United States. It's Juneteenth. What is Juneteenth? Can someone explain to me what the... Okay, so when the slaves were emancipated. Okay, so it's Juneteenth in the US. So we are still here. We still bring you crypto love and we still bring you crypto wisdom. Let's go, guys. Alrighty. We're back and we bring you crypto love and crypto wisdom on this Juneteenth day when the US markets are actually closed. So listen, if you are here and you are with us, smash the subscribe button. Welcome to the community. And also if you are here and you're a long time veteran of the show, then just hit the like button and give us some love and let people know that we're actually here. We are going to bring you a very, very, very high alpha per minute show here on the show. Lots to talk about just specifically around this ETF, because as I said to you when we started the show, when I look at the market, I think that we could have been a lot worse than we are actually today. I think if you look at the attacks on the SEC, when they came on the 5th of June, and Bitcoin was at around 27,000 when they came. And we got knocked down to 24,750, which is quite a bad hit on Bitcoin. But Bitcoin recovered pretty well, and in fact is now challenging this 200-week moving average. And I think safe to say, even though we just missed it, I think it's safe to say that we're probably going to hit it next week if this momentum carries on. And I think we will. I think it was when you break below the 200-week MA, the idea is not to stay there for a long period of time. But if you're there for 1 or 2 weeks, then it's not very different from where we've been in the past. So if you look at the 200-week moving average when it comes to Bitcoin, you see it hasn't really gone below it. It went down here in this period over here. I think it just touched, and here it just went below for like 1 week, and then the second week it actually bounced back up. And then the next time that it broke down was actually here in 2022. This year was the COVID correction. So it was like a black swan event, and it was like a down and then quickly a back up. But what you can see is that since the attack that the SEC went all out on crypto, you can see the market structures change, because what's happened is Bitcoin is now only $500 away from where it was when the attack came. But if you look at the altcoin market is absolutely wrecked. So if you look at the banter bubbles and you set yourself a monthly view on the banter bubbles, what you can see is that the altcoins are absolutely wrecked. If you look at, you look at the Richard Hart coins, Pulse, Hex, Pulse X, all those guys, those are all down 76%, 65%, 47%. But then you look at all the other coins. So you look at Matic down 30%, Algorand down 30%, ApeCoin down 40%, Solana down 22.63%, Cardano down 28%. What do these tokens have in common? Well, these are the ones that the SEC actually said, well, these are securities. These tokens are actually securities. And then you got other headwinds also coming in for altcoins, because not only are these tokens declared securities, and therefore companies like Robinhood and a whole lot of other US companies declared that they're not going to be listing these on their platforms anymore, which is the one attack. But then you've got Celsius coming out and saying, we're also selling all of our altcoins. Here's a list of the Celsius altcoins. This is the ERC20s. I think we do have all the other holdings over here. So you have all the other holdings over here. And you can see that Celsius now coming onto the market also saying, look, we're selling all of our altcoins too. So it looks like there's going to be headwinds if you're an altcoin holder. But I wonder how many of those headwinds are already priced in the market. And that's why when people talk about an altcoin wipeout, which is what we're writing up over here, I don't know if that news is already in the market, because we already know that the tokens have been declared securities by the SEC. We also know that no token is safe. You may think that tokens are safe, but no token is safe. It's like what I said here. I said we're playing a game of SEC bingo. It's like you never know which token is going to be declared a security next. Yes, these ones have been declared securities, but that doesn't mean that that's it, and that's the only ones that are going to be declared securities. Those are the ones that are going to be declared securities until the next time that there's an SEC attack. And then what's going to happen is a whole batch of other ones are going to be declared securities, and then we start this whole game again. So yes, for now, these ones have been hit much harder than all the other ones, but that doesn't mean that this is where it is. In fact, I would say that these guys have probably bottomed. The Matics, the Cardanos, the Solanas have bottomed. Now, I just want to say one thing to all of you, because I know that there's a lot of very smart, very funny people here in the chat. I just want to say, Cardano's had a very, very, very rough time. As you can see, it's down 28.5%. It's been declared a security. It really has had a hard time. Now, I think we've got to be sympathetic to the Cardano community. And I think we really mustn't make any jokes about the fact that Charles Hoskinson is going to the bottom of the sea to find clues about aliens, because he's maxed out the community on Earth. So no jokes about Cardano and Charles Hoskinson looking for alien communities. We don't want to do that. It's been a tough time for Cardano holders already. Freddie, what are you laughing at? No, but we mustn't. I said we're not making jokes like that. I've heard I know a lot of people are making a lot of jokes about Cardano and the fact that Charles is looking for aliens. But I mean, there is logic there, because once you've maxed out the communities on Earth, you do need to go and look in other alien communities to see if you can increase the size of the community. No jokes like that, guys. Please, this is a bad time. We're all in this together, and we're all fighting the SEC together. Now is a time when we all have to stick together. This is a time where all people on Earth have to stick together, and some people must also go look for aliens. So now, with that said, so as I said, we don't know when the attack's going to come in. We're playing bingo. I actually think I want to make this into a real game. Like a real game where the community all gets these boards. We'll make a lot of boards, right? Like these bingo boards. And then everyone will get a bingo board with different tokens on it. And then the winner gets like $10,000. The one that gets like all the securities. I think that's a good game. What do you guys think? Should we play that game? Yeah. Okay, Let me know in the comments if you would play that game. If we did actually do that game. Guys, I said no jokes about Cardano. Please, we're all in this together. Cardano's had a tough time. Anyway, let's talk about the actual alpha, and let's talk about the big story of the day, and that is what the performance of Bitcoin has been. And I said to you, I think the only reason why Bitcoin has performed like Bitcoin has performed is because of this SEC news. So I agree with 𝗏𝗏𝗃𝗃 here, because 𝗏𝗏𝗃𝗃, he said, after flashing out the majority of the leverage and bad actors over the last years, Bitcoin market has finally some clear catalysts on the horizon. BlackRock ETF approval is 8 months out. BlackRock ETF approval deadline is 8 months out, right before the halving, which is now 10 months out. So yes, we do believe that the halving is the most reliable indicator of the Bitcoin cycles. And maybe it's coincidence, maybe it's not, that the BlackRock ETF is coming at the bottom of our market when the SEC have just attacked crypto. I mean, you could say that, oh my God, that's a coincidence, right? Because it's quite surprising that BlackRock would enter the market just after the SEC has attacked the market. So if you were new to this, what you would say is, oh my God, what a surprise. But if you've been here for a while, you know that's actually exactly what's happening here. You're smart enough to understand exactly what's going on here, and that's what we're going to talk about here today. Be that as it may, what we see now is that since we had the news that BlackRock is coming into the market, which coincidentally came just after the SEC attacks. So very, very coincidentally, the news came just after the SEC attacks. We're going to dig into that in a second. In a second here, we do see that people are actually starting to accumulate all the different cohorts. The cohorts of less than 1 Bitcoin, the cohorts of 1 to 10 Bitcoin, the cohorts of 10 to 100. All of them except the mega whales are actually starting to accumulate Bitcoin and not actually dumping their Bitcoin anymore, which they were going to do. And the reason why that is because this BlackRock thing is huge. It is huge. And I'll explain to you why I think that this BlackRock news is actually so huge. So BlackRock are, I think, the biggest asset managers in the world. And certainly if they're not the biggest asset managers in the world, they are the biggest asset management company in the United States. And what we can see around BlackRock is they have got $9 trillion of assets under management. And primarily what they do is they manage assets on behalf of the US government. And interestingly enough, when the COVID collapse happened, when the COVID pandemic happened, and they were talking about stimulus and whatever else, one of the people that the finance ministers and the treasury secretaries in the United States actually consulted was actually Larry Fink, who's the head of BlackRock. So they're not a small company. They are effectively, as 𝗕𝗏𝗃𝗀𝗃 says, they are a proxy for the US government. There's lots of chatter on this BlackRock Bitcoin ETF, and rightfully so. BlackRock more or less is the US government, and they've also received approval on 575 out of 576 ETF applications. They know exactly what they're doing. And the only ETF where BlackRock hasn't received the approval is an ETF which didn't have to disclose daily holdings. They were taking a chance on a new type of ETF that didn't have to disclose the daily holdings that they were holding. And that's the only one that they've actually that has actually been declined. In other words, they've had 575 wins and 1 loss, and the 1 loss was like this new type of structure which didn't actually have to disclose daily holdings. And then the SEC said, hold on a second, no, that now you guys have pushed it too far. Even though you are BlackRock and you are actually our boss, BlackRock effectively is the boss of the SEC. We'll talk about that in a second. So they said there is one type of SEC, one type of ETF that, I've got to just try and find you this thing where it explains it. It says, but they basically applied for an ETF that didn't require daily reporting. Anyway, be that as it may, we'll get there. It says here, in this article, they spoke to 𝗏𝗏𝗃𝗃, who's quite in touch and knows exactly what's happening with the ETFs. And he says, look, Larry Fink is super connected. BlackRock is super connected. He says there's been no signs that the SEC is willing to approve, but BlackRock is very connected. So maybe they know something. And if they could, it would be a big win for 𝗏𝗏𝗃𝗃, who actually applied for an ETF, which is going to be just ahead of BlackRock's ETF. So the question is, what do BlackRock actually know? Because, as we say, BlackRock have a very, very, very big reputation. And they know they're not going to go in there if they think they're going to lose. This is a very, 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 very calculated move. This is not a coincidence that they just came just after the SEC attack and decided they're going to file for a BlackRock ETF. And then, I mean, just get the logic here. They apply for an ETF with Coinbase as their crypto custodian. Now, hold on. If you're BlackRock, and you're really smart, because you have to be really smart if you're BlackRock, and you apply with Coinbase, whom you know the SEC has just opened 4 charges of securities irregularities. I'm not going to say securities fraud, but four accounts of securities irregularities. Why do you apply with a company? You think about this. The people that have to approve the ETF is the SEC. But the SEC is the same SEC which is going after Coinbase. Now, BlackRock is very, very, very smart. Why would they apply using Coinbase as the custodian? Why would they apply using the Coinbase custodian at the time when they applied for this Bitcoin ETF, knowing that they've got a 575 wins to 1 loss ratio? What do they know? What do BlackRock know that we're not seeing? Because if we can crack that code, then we know what's going to happen with this ETF, and then we know how to play our cards. So let me tell you what I think they know, okay? I think they're very, very, very smart. I think that they've let the crypto market develop for, I know you can say, well, Bitcoin is like 10 years ago, but forget about that, or 13 years ago, whenever it was. But I think they've let the market develop for the last 5 years to become almost like an institutional type asset. So I think if you would have looked at Bitcoin before 2017, there was no chance that Bitcoin was an institutional type asset. And in fact, there was no real guarantee that Bitcoin would be here and continue. In 2017, we always thought that crypto might actually die. But now I think the picture is different. We've been here, we've built amazing infrastructure, we have experimented, we have failed. Some of our experiments have succeeded, most have failed, some of them have succeeded. We've built on-ramps, we've built off-ramps, we've built systems onto the banks, which eventually some of them got cut off, etc. But they've let us play in our sandpit. And it's almost like if you think about kids playing in a sandpit and the parents looking in and going, look, we know they're going to swallow sand, let them swallow sand, but maybe they'll actually build a nice castle. And then when they come in and build a castle, we can decide if we want to play in that castle or not. Maybe that's exactly what's going on. And I think I agree here with this lady who's a Soros fund management CEO. And she says that crypto is actually ripe for TradFi to take over. So in other words, what she's saying in this article is she says crypto is here to stay, but the recent tumult provides an opportunity for traditional finance to take the lead. So it's almost like, look, let them play in their sandpit. When we think that they've done something good enough, then we'll come in and we'll actually become we'll actually take over, and we'll actually drive this industry like adults. Now, remember where the SEC strings are pulled. Who controls the SEC? Well, the SEC is controlled by the donors. And who controls the donors? Well, the donors are Big Pharma and traditional finance. And so it's not really surprising for me that it wouldn't really surprise me if BlackRock were very, very, very strategic. And they said, you know what, now's a great time. We've cleaned up the industry. The SEC's gone up against the bad players. And we also know that this technology is here to stay. So we know the time is right. We also know another thing. We know that the SEC is now under pressure, both politically and in the public eye, because the elections are coming up. We know the SEC is under pressure to show a win. Okay, now, up until now, the SEC's only shown a negative stance towards crypto. They haven't done anything towards Bitcoin because they can't. They've shown a negative stance towards crypto. Now, because we're getting closer to the elections, they need to do something to win back public trust. So they knock out crypto, they go for Binance, they go for Coinbase, they go for all the securities, they upset everybody, but then they've got to show a win. And what's the easiest win without getting egg all over their face? Well, approve a Bitcoin ETF, because anyway, Bitcoin is decentralized. It can't be a security. We know it can't be a security because it's already a commodity. And so they've got to show a win. And so I think I agree with Nick Carter here, where he says the SEC is under significant pressure given the recent assaults in the industry and wants to give the industry a perceived win to take the political heat off. And he's doing so by letting the grown-ups take over in a crypto-native firm that have now been defanged with various enforcement actions, which is maybe why the SEC is actually partnering up with Coinbase, because why BlackRock is actually partnering up with Coinbase. We'll talk about that in a second. The other thing that BlackRock know for sure. So what do they know? They know the timing is probably right. They know the SEC needs some wins. They know that the timing's right for TradFi to actually come in. They also know that with all the previous rejections, whether it's been Cathie Woods or the Winklevoss brothers or Wisdom Tree or Bitwise or whoever it is, they also know that the reason why the SEC has declined these ETFs is because of market manipulation. So if you look at all the times the SEC has pushed back, they said, look, the reason why we're declining this is because we're worried for market manipulation. And the reason why we're worried for market manipulation is because there are no exchanges that are regulated and integrated into us and supervised by us so that we can watch the market pricing. And so we're worried that there's going to be market manipulation. Now, super interesting. I mean, if you're so worried about market manipulation, why do you approve a Bitcoin futures ETF? Surely the futures price is a derivative of the spot price. The spot price is the actual price, and the futures price is just some derivative. I mean, of course. But BlackRock also know how to structure ETFs. Remember, they've got a 575 win rate to a 1 lose rate. And so here, even in their filing, they say, trading activity on digital asset exchanges, which in many cases are largely unregulated and may be subject to manipulation. So they acknowledge that, which is the same thing that the SEC have acknowledged in all their denials. But they also say that they will bring in NASDAQ, another one of the TradFi grown-ups, right? To enter into a surveillance sharing agreement with the operator of a spot trading platform for Bitcoin. I mean, so you read what's going on here. It says, buried on page 36, the company states that to mitigate against market manipulation, it will bring in a traditional finance company, NASDAQ, TradFi. You're starting to see what's going on here. TradFi, and then again, TradFi coming in to take over our industry. Let the kids play in the sandpit. Let them build these amazing things, and then let the incumbents, the people that have been funding us, the people that have been lobbying, the traditional finance people, let them come in and swoop and take everything at fire sales when the SEC take these actions and scare the living shits out of everybody in the market. It's not a coincidence. There's no coincidences here. You cannot tell me that BlackRock came in just after the SEC attacks, when Binance was completely out of the market, when there was one soldier standing, and that soldier is Coinbase. And Coinbase has a big fight now against the SEC, but it's a clean fight. And maybe this is preparing Coinbase for a takeover by TradFi. Maybe this is what's going on here. You got to keep your eyes open to what's going on here. And that's why I said when I saw this, I said, did BlackRock really just apply for a spot Bitcoin ETF using Coinbase as a custodian, a US company that the SEC claims is actually an unlicensed securities exchange operating illegally? There are no coincidences here, guys. There are absolutely no coincidences here. So I think that that's what BlackRock knows. And I think that they're not going to lose this. I think that they're going to actually win the ETF. And I think when the ETFs actually hit the market, I think that becomes a game changer. And specifically this ETF, because unlike regular ETFs where there are multiple ETFs around different stocks, this is an ETF around one commodity, which is Bitcoin. And I think that the first to market here is the most important. If you can be the first regulated, reputable, credible ETF to market, you're going to gain the market share the quickest, because it's very hard to compete with a first regulated, credible ETF. Then you start competing on things like distribution and stuff like that. And that's why I think that BlackRock may actually be the best player here. Why? So let's look at BlackRock's history. So you look at BlackRock's history and they say, look, This is when the first gold ETF got listed on the New York Stock Exchange. By the way, coincidentally, also a BlackRock ETF. And you can see what happened to the price of gold ever since it happened. Now, why did that happen? Well, of course, it created a platform for people to invest in a commodity which was traditionally very, very, very hard to buy. Sound familiar? Exactly. We have a commodity here which is very, very, very hard to buy, quite hard to store. I mean, yes, gold is much harder to store, but Bitcoin is hard to store for the regular asset manager or individual or whatever else. And so we've got this ETF for a commodity which is very, very, very hard to buy. And this is what happened to the gold market ever since it happened. Now, as 𝗏𝗏𝗃𝗍 says, they've got a 99% approval rate. What happens if this is what happens to Bitcoin once BlackRock actually give us access? So then what I did was I actually studied what is it that actually makes BlackRock so powerful and such a powerful force in actually launching ETFs. Because I wanted to understand whether when they launch the Bitcoin ETF, whether we can expect the same results or whether this is just crypto bros on Twitter cheering for good news. And so I try to understand really what it is that BlackRock actually provide that could make Bitcoin this kind of asset class that goes that high up. And the first thing that I realized was that BlackRock obviously manage a lot of money. And when they come into the market and they say, you know what, we're a $9 trillion company and we're launching an ETF and we manage a lot of money, chances are that people inside the BlackRock stable, other portfolio managers in the BlackRock stable, will put some of their money into into this BlackRock credible ETF. But that's not what makes it so special. What makes it so special is that BlackRock are also the biggest distributors of financial products in the United States. What I mean by the biggest distributors of financial products in the United States, BlackRock own the system that millions, I don't know if millions, but a large portion of the wealth advisors in the US actually use the BlackRock system. And so Adam Cochran actually wrote a 12-part thread. Don't worry, I'm not going to take you all through the 12 parts, but he says, look, people don't realize that BlackRock actually made the gold market as we know it. Pre-BlackRock, it was a $1 trillion market. Now it's about a $13 trillion market. How did they actually do it? So the first thing is they like to be first to market. They come out first to market, and in this case, they probably would be first to market. Then they have an army of advisors around the world who receive commissions for pushing their products. So when BlackRock launched this ETF, there is an army of advisors around the world that actually receive commissions for selling their products. And they say, and while they've got a lot of brands for their funds, they are most known for iShares, which offers 3 of the largest gold ETFs in the world. In fact, iShares offers some of the largest ETFs in the world, full stop. Now, these advisors earn a fee when they sell the product. BlackRock has a tool to let its advisors earn a 3% advisory fee on the products that they sell, as well as to add on any custom advisory fees. So it's part of the BlackRock system that allows for this distribution. But in most places in the world, the fees so they do get the fees. Advisors are eager to push the product because they get this commission in a new asset class to tell boomers that gold was the perfect component to round out a portfolio. So they went out and they said, look, there is this new asset class. It's called gold. You need to have it in your portfolio. And they started selling it into their portfolio. And because this army of salespeople around BlackRock started selling gold, that is what got the momentum of gold. Now, we're making the assumption that now that their systems are much more automated, there's many, many, many more advisors than there were when the gold ETF came out, that the same thing's actually going to happen. And so it basically increased demand. And as people valued it, it became more and more valuable. And he says, but BlackRock, through its army of advisors, pushed the narrative that gave gold broader legitimacy in a portfolio. Now, just substitute some words here. So, but BlackRock, through its army of advisors, pushed the narrative that gave Bitcoin broader legitimacy in a portfolio. What does that do? Well, its network told millions of users that you needed gold, substitute the word gold with Bitcoin, to have a well-balanced portfolio. It's almost like they created the asset class. After doing this for 2 decades, we now find that the youth wealth managers and economists who have climbed into the seats of the central bankers and sovereign wealth funds view gold as a portfolio of safety. So it's almost like a grooming tool that these people, they got groomed in the gold narrative, and then they were promoted to be going to the central banks and whatever else. And they said, oh, well, you know, the narrative is that gold is a powerful thing to have in your portfolio. And that's exactly it. If you have the biggest distributor, and I'm going to say in the world, but I may be wrong because I don't have the exact facts. But if you say the biggest distribution company for wealth and wealth products in the world, BlackRock, is now empowering its advisors to potentially sell the first ETF ever in this asset class, and they obviously create narratives for their advisors to sell it. So they'll create this narrative of like, you know, to have a balanced portfolio, you need to have Bitcoin, and they start pushing it because they actually get distribution. Listen, to be honest, and I know this video is now going to get removed from YouTube, so enjoy it, watch it now because it's going to get removed. But it's exactly what the drug companies do. The drug companies create a narrative so that you will use their drugs, and then that just becomes, the narrative actually becomes the truth, okay? And that's just what it is, even though the truth is bullshit. The narrative they created around that virus that came, you know what I'm talking about. I don't want to say it because if I do, we will get removed off YouTube again. And I don't feel like getting removed off YouTube again. But you know exactly what I'm saying. They created a narrative that some treatment works or that something worked, and then we all just believed it, when in the meantime, it was a created narrative. And the same thing is going to happen here with the financial services industry, except this time the big pharma is TradFi, and the doctors are the wealth managers. You get it? Great. So we have an understanding of exactly how this works. And you see, as I mentioned it already, YouTube started to limit the distribution of our videos. You can see how the live viewers dropped immediately. Did you see that? That wasn't me. I saw that. All right. So that is what I think is happening. I think BlackRock know that the time is now. The time is now. TradFi is ripe. The SEC need a win. They also know how to create ETFs. They know what the SEC is looking for. They fixed the holes by teaming up with TradFi, NASDAQ, who, by the way, the SEC love and trust. And I believe that they will be the first people to get their ETF and to get the ETF approved. Rest assured that as soon as they get an ETF approved, there's going to be a flurry of ETFs hitting the market. Why? Why do we know this? Because once one has been approved, you cannot then not approve the others. So once an ETF has been approved, then and there's a playbook for how ETFs need to get approved, well, then you effectively have to get you have to approve all others that make the same application. You can't decline one and do the other one. Okay. And so what we've seen, and I'm actually surprised there haven't been more of these, is that Bitwise filed for their spot ETF just like the BlackRock ETF, just after the BlackRock ETF. And then on the weekend, we actually got rumors, unsubstantiated rumors, but you know what I'm saying, that Fidelity are now going big into crypto. So, well, they always have been big into crypto, but that they may be making what he calls a seismic move in crypto via BTC and ETH. A lot of people said that they expect Fidelity to make a bid for Grayscale. Now, what does that mean? Fidelity could go and say, look, if we want to compete with BlackRock have bigger distribution than us, but if we buy the Grayscale Bitcoin Trust, we could actually be the first big Bitcoin ETF en masse, because we know that the Grayscale Bitcoin Trust already has 632,000 Bitcoin sitting in the trust. We know that it makes per month about $40 million the GBTC one makes about $30 million in fees. They make get this, they get $350 million a year for storing Bitcoin. That's literally what they're doing. They make $350 million a year for storing Bitcoin. I know it sounds crazy. Anyway, there's the GBTC discount. You can see on the day when people suspected that BlackRock were going to get the ETF approved, you can see that the GBTC discount spiked to 32.6% instead of 36.7%. So that's a speculation in the market. And I think that what we're going to get now is we're going to get a whole flurry of these applications, once one is approved, I think they're all going to get approved. And then I think like Bitcoin ETFs are going to be par for the course. And then I think that the next ETF that they're going to go for is the Ethereum ETF, because I think Ethereum is like it's in the zone now. It can't really be killed. It is decentralized, and the SEC is not really going for it. And so I think the next ETF that comes off that is the ETH ETF. But let's go one step at a time. And look, net, I think it's a great thing that BlackRock is doing this. So a lot of people are saying, we got into crypto because we wanted to go against TradFi. Guys, seriously? I don't really care who buys my bags. I just care that someone is here to buy my bags. Now, if we got here and we bought before TradFi, that's cool. Don't be like these crypto guys that say, well, Bitcoin is supposed to be decentralized, and if BlackRock own a big supply of their Bitcoin in a trust, just say thank you that you got here before them. Thank you that you had an opportunity to buy before them. And then when they come and set up their ETFs, then just graciously, when Bitcoin gets to $100,000 or $200,000, just sell it to them and just say thank you for coming in and buying my bags. That's it. Cool. I also said to you guys that I wanted to talk to you about. I still see Cardano jokes here. I still see people joking about Cardano. It's terrible, these jokes. It's terrible that they've gone to fetch the aliens. I did say to you that I wanted to speak to you about a play in crypto, which I think is a very, very, very smart play right now. Especially if you are worried about this altcoin wipeout, and you are so worried, like all of us. A lot of us are worried about which of the tokens are going to be deemed securities next. And I see a lot of people that are really, really, really worried, and they're saying, where should I put my money in crypto? Now, of course, you can put in your money into Bitcoin. You can put your money into Bitcoin and ETH. You can put your money into Bitcoin, ETH, and a whole lot of altcoins. But there's another place you can put your money. Now, I know it's not the cool thing to do, but what if there was a play that could get you exposure into crypto in a very, very, very smart way, exposure to the whole crypto ecosystem, not just some of the ecosystem, internationally? Would you take it? So this is where I think we need to talk. So when BlackRock announced that they're filing for the ETF application, they used Coinbase as their crypto custodian. So the world's biggest asset management company, who knows exactly how the SEC works, teams up with a company that the SEC is suing for securities violations. Now, what do they know? We said what they know, but actually, what I wanted to show you something. Actually, just before, let's just go back. I forgot to show you something. I wrote it down here. Interestingly, where the first gold ETFs were listed. Actually, the first gold ETFs were listed in Canada. Does that sound familiar? Exactly. It's the same as Bitcoin. There's already Bitcoin ETFs in Canada, and there aren't Bitcoin ETFs in the US. I just wanted to share that with you. Anyway, let's go back here. We see that BlackRock have partnered up with Coinbase, and Coinbase is in litigation with the SEC. Now, we also know that Coinbase launched at about $430 per share. Now, yes, it was a spike on listing day. It did go back up though to about $370 a share, and then it crashed all the way down to $55. So today, you got Coinbase. Coinbase has a market cap of about $13 billion. That's it. It's quite a small cap when it comes to thing. Now, here's my idea. If you believe in crypto, you got to ask yourself whether the altcoins will survive, which altcoins will survive, where should you put your money? But the one thing you know for sure is that the exchanges are going to survive, because without exchanges, we don't effectively have crypto, right? So let's just agree that the center point of all crypto assets is the fact that they've got to be traded. And let's agree that some of the assets are going to be traded on a decentralized exchange, but the majority, and at least for the next 10 years, are going to be traded on a centralized exchange. And so right now, there is a battle where if you can win to become the one core centralized exchange that is actually SEC regulated and that does tick all the boxes and that doesn't have any baggage with it, you'll agree with me that's a very, very, very smart play in crypto, and it gives you exposure to the whole crypto ecosystem. In other words, what we know is that Coinbase trade Bitcoin, Ethereum, altcoins. They do staking, they do custody, they keep adding new products, but they do it in a very clean, by the law, by the book type of way, right? And so we look at where Coinbase are today. They're sitting on about $5 billion worth of cash as per their previous filing. So they've got a lot of money to go and fight the SEC if they need to fight the SEC. By the way, here is their filing over here. And if you look at their cash reserves, which I think are somewhere over here, it's very small. I know most of you on a mobile phone, you can't see it, but they do have $5 billion to go and fight, to go and do what they need to do and to fight the SEC and to do whatever else. We also know that in February, they were about 65% of the US market exchange market share. And the rest were Robinhood, Crypto.com, eToro, Gemini, even Binance, etc. But we know that they've also cemented their lead, and that most of these others are actually leaving or have left or got attacked by the SEC. Gemini attacked by the SEC. Kraken attacked by the SEC, shut down their staking. Robinhood shut down most of their altcoin trading. Crypto.com said the other day that they're leaving the United States. And so what you're starting to see, Binance destroyed by the SEC. So what you're starting to see is you're starting to see that there's going to be the emergence of one big player in the United States. Who's that player going to be? It's going to be Coinbase. And so to me, I have no doubt that Coinbase, they may not win the court case, but they won't lose completely. They'll win certain things, they'll gain certain things, we'll lose some soldiers, we'll gain some soldiers. But ultimately what I think is going to happen is Coinbase is going to emerge victorious. And when they emerge victorious, you're going to have one big consolidated player in the United States, which is called Coinbase. At the same time, they cover the entire crypto industry and they are spreading to the rest of the world. So unlike Binance, which initially went to the rest of the world, made a whole lot of mistakes in the rest of the world, became a very big exchange. I'm not taking that away from them, but also now have a whole lot of problems everywhere in the world. So I just want to show you like some of the problems that Binance have, okay? So Coinbase expanding outside the US. They got their Bermuda license. They went they've got a Canada, or they're working in Canada. They went to the UAE to explore it as a potential hub. They're starting to expand internationally. Now, Binance has always been there internationally, but they're under investigation in France. They quit in the Netherlands. They announced their exit from Canada while Coinbase is saying we're building in Canada. It seems that the Coinbase approach of slow and steady actually may have paid off. So now you're going to get one player that emerges in the United States. This player is going to expand internationally with a very, very, very clean track record and with the endorsement that, you know, we're the cleanest guys in the United States. And there's no one who can sling mud on us. We don't have any money laundering charges. We don't have any messing with customer funds, etc. What are they called? Commingling of customer funds, etc., etc. And so I think what happens is that we may see Coinbase emerge after a very, very, very big fight. I think they actually emerge as a giant. And when they emerge as a giant, I think that people who bought Coinbase or hold Coinbase not only get exposure to the entire crypto industry in terms of services, but also they may get exposure in crypto in the entire world. So across all products in the entire world as well. And that's why, to me, I'm thinking, if you don't feel like picking altcoins and stuff like that, just buy Coinbase, because you get kind of exposure to all of this. And I think a market cap of between $10 and $15 billion is a very, very, very small price to pay if this crypto industry works. Listen, if crypto fails, Coinbase fails, we all have to go and find a job at McDonald's. But if crypto works, then I think Coinbase is a very, very, very good proxy to be investing, to capture the value of the investment. Let me know what you think in the comments. I know it's not the popular thing. I know you come here for degen altcoin picks, but we've got to take a much more mature approach here and say, well, you know, much more mature approach. We got to buy. We can look at Coinbase as a proxy for what's going to happen in the industry. So there we go. let's look at it. A couple of other things. I mean, speaking of Binance, let's quickly just, they did reach a settlement with the SEC, a settlement with the court, and the SEC didn't get their emergency relief, which was to freeze all of Binance's assets. And so the funds are safe. The exchange can continue to work. Let's talk about some other related but unrelated things. So Kennedy is now in the lead, leading Joe Biden in the 2024 election polls. Now, you know what I said about this? I said, if the US, knowing that they have Kennedy, if they still vote for Biden to be the next president in the United States, well, then you got to just look at the US and say, you deserve everything that's thrown at you. Anything that happens in the next 4 years, you kind of deserve it. So, let's see what happens. I've been listening more and more to RFK. This video is definitely getting removed from YouTube. I mean, there's no doubt this video is getting removed from YouTube. I've been listening to RFK. He was on the Joe Rogan podcast, very long pod, like 3-4 hour podcast. Should listen to it. Very, very, very interesting. He's actually quite good. Before we go into this, I saw Do Kwon actually is found guilty. Do Kwon found guilty in Montenegro in a fake passport case. It's quite hectic. A couple of other things. 𝗧𝘄𝗶𝘁, he was taken for defamation charges by, who was it? Was it 𝗪𝗍? Yeah, 𝗪𝗍 took him for defamation charges. There is a link below. If you want to support 𝗧𝘄𝗶𝘁 in the court case, just click on the link below and you guys can make a donation. I think they've already raised like over $1 million for his defense fund. So he said he only needs $1 million, but keep an eye on it. He does do very, very good work in the industry. Now, we've had our run-ins with him, of course, as you know. We then showed him all the things that we knew we were right. And he actually... he wrote a text about us, or a tweet about us, saying that he actually thinks we're the good guys in the industry. And you can go and look at that tweet. I'll put it on my tweets. What else is there? There was some more. Oh, something's happening. When Ferdy sends something in the show group, something's happening. BNB L2 to be launched by BNB Chain. Yes. Is that the big news?
Not big. I saw Adam Cochran tweeting about it.
A BNB L2. Okay, well, we'll talk about that another day because I think it's not really relevant. By the way, if you are in the UK and you want to go to a UFC fight and you have a BitGet account, then there's a link below. You can click that link, and if you open an account in the UK and you trade it, you actually can get tickets to a UFC fight. So, I think that's pretty cool. Okay, listen, I got to go to Twitter Spaces now. So join us on the Twitter Spaces. I'll be there in about 5 minutes. I'll see you guys again tomorrow. Until then, trade well, my friends.